Good morning, everybody, and welcome back to Beat the Bell presented by King Capital. Hope you guys all had a phenomenal weekend. Important week this week in the S&P 500. The reason I say that, last week, for the first time in 5 weeks, the S&P put in a red week. So, are the Bulls going to step up? Will the Bears remain in control? We'll be watching and we'll be trading. To talk about it, let's bring on today's panel, starting with Money Mander. Money Mander, good morning.
Good morning. Happy Monday. You got it. I think the Bulls step up this week, but we'll dive into that in a second.
I think so too. We'll talk about that a little bit later on in the show. Diamond trades. Good morning, Noah.
Alejandro, what's going on? Hope everybody had a great weekend. Excited to get into it. Let's go ahead and kick it off.
All right. And last but certainly not least, Stock Snipa.
Good morning, guys. Hope everybody had a great weekend. Let's get to it.
It's a fire sweatshirt, brother. Looks good. Can we go back to that? I need that one. I don't even have that.
Yeah, that thing is tough.
That's fresh. All right. Let's go into Fed forecast and economic calendar. What do we got this week?
For sure. Let's kick it off with the economic calendar this week. So definitely a relatively busy week as far as news goes. We've got Dallas Fed manufacturing this morning coming in at about 10:30. We'll get some more data tomorrow on the housing market. So we've got Case-Shiller home prices that'll come out at 9 and new home sales as well as durable goods before the open Wednesday. Retail sales. Retail inventories, wholesale inventories, as well as Fed Chair Jerome Powell, who will have a speech at 9:30 right at market open. So that'll be something to pay attention to. Thursday, we have Jerome Powell speaking again. That one will be at 2:30 in the morning. It's overseas, so it won't be affecting the market quite as much, but we do still have initial jobless claims, GDP growth rate for Q2, and pending home sales on Thursday, followed up by core PCE on Friday, Chicago PMI, UMISH, consumer sentiment. So definitely a relatively busy week ahead of next week. So next week is obviously 4th of July. This week is going to be a full week of trading, no interruptions. Next week, with 4th of July coming on Tuesday, Monday is going to be a half day of trading. So the market will close at 1. And then Tuesday, the market will be closed for the market holiday before full trading Wednesday, Thursday, Friday. So that's what next week looks like. Let's go ahead and dive into this week's trading. So last week, the all three major indices posted weekly losses for the first time since May. That snaps a winning streak, as Alejandro mentioned briefly before, of about 8 weeks for the NASDAQ and 5 weeks for the S&P. So definitely a bit of a shift in sentiment coming out of last week. And June has really been a great week overall for the markets outside of last week, which saw, that first pullback. Several factors sort of played into that broader market pullback. First, the markets were really simply overbought, particularly looking at tech. Most momentum indicators were showing overbought signals from our side and MACD. It doesn't really matter what you were looking at. Just from a momentum standpoint, we were definitely a bit extended to the upside. So the pullback, makes a bit of sense, especially after the QQQ's 15% run up in just 5 weeks. Additionally, central banks across the globe reiterated their firm position against inflation. Bank of England raised rates last week. Here at home, Jerome Powell, though they did not raise rates at their May or at their June meeting for the FOMC, did tell Congress in his testimony that they do plan to likely raise rates at least one more time before the year is over. And then one more thing, we've got the end of the quarter coming up, obviously. So this week will mark the last week of trading for Q2. And so we'll see if we can get some more continuation in the indices as they've, sort of pulled back from their recent strength. We'll see how they want to close out the quarter here. Mander, what are you looking at coming into this week?
Upside, personally, and kind of hit on your point there. I think going back to last week, it was the first red week, like you said, in 8 weeks in the NASDAQ. We pulled back 2% off a 15% rally to the upside, and all of a sudden you're starting to see the 2,000 chart comparisons on FinTwit. Everyone's saying bear market rally top here, blah, blah, blah. I think it was just an oversold pullback or an overbought pullback that needed to happen fundamentally. So we'll see what we get this week. But going back to the NASDAQ, if we can hold where we're at right now and or close the week green, this would actually be the strongest first half of a year ever on the NASDAQ moving forward. I think we're up about 35% currently on the NASDAQ. So if we can hold where we're at and or continue green, you've quite literally witnessed history here in the strength of tech in the first half of this year. And going forward, looking at why, I think we've talked about this many times, but it's really been these end of week gamma squeezes that we're seeing the largest move. Pretty much every Monday, Tuesday, Wednesday, we get some type of either pullback or consolidation and chop leading into these mega moves we're seeing on Thursday and Friday. And the CBOE actually just released some data kind of showing at why. Looking at the chip sector here in particular to start, the sum of call buying for NVIDIA, AMD, and Intel this month in June has been the highest on record. The three of those are averaging 1.5 million call options traded across strikes and expirations every single day. And SPX in the exact same boat here. Going back to June, the CBOE released some data on 0DTE options on SPX. There's been an average of 2 million calls traded every day this month, another all-time high. So kind of going to Matt's point, and Brent Kumbuka here, a founder from Derivatives Data at Spot Gamma, also said the same thing from a mechanics point. They urged a similar sentiment that the signal you'd expect to see before a blow up or the top of this rally would be a lot of put buying, traders betting the stocks have huge downside now off the rally we've seen. But realistically, what we're seeing is more so still a FOMO move going through the entire month of June. You're seeing all-time high of call buying. So before, just from a mechanical standpoint, we can't really roll over until people are starting to bet on downside and hedging gains more so than they're betting on continued upside. And right now, it just feels like we still have a FOMO continued upside move from a mechanics standpoint in the derivatives market. And that's just going to keep driving us higher until it stops.
I think that makes sense. Fundamentally, right? You had a situation where coming out of March, the macro environment was a bit more unclear. You didn't really know where the Fed was going to put that terminal rate. You had the banking crisis going on with the collapse of several banks in the United States. And you looked at all the risks, I guess, that were posed to the equity markets, especially trading at where they were. And if you remember the sentiment back then, that the sentiment was still that things are, elevated and, we need to pull back. And you have treasuries trading at, offering the best yield that we've seen in decades, right? And so from a lot of people's perspective, the smart thing to do is park your money in this risk-free rate while it's offered, right? Because we know it's not going to last forever. Wait for things to become a little bit more clear in the equity markets, and then you can go ahead and invest. And that puts people behind the ball, right? That have missed a lot of this run up on the way up. And so I think that sort of speaks to that FOMO that you're talking about, that you're seeing, particularly in those semi names, right? That have absolutely exploded off the lows and really have had a June to remember. So we'll have to see if that's going to continue here into the next coming weeks. But that'll wrap it up for us here at Fed Forecast. Pass it back to Alejandro.
Thank you, fellas. Let's talk about the S&P. Going to share the system chart. So as we know, 20th, we got a sell signal for the first time in a long time. Looking at the 30-minute chart here, we got the bearish cross, the 10 SMA below the 50 SMA. And then we got the same exact thing on the hourly chart. And as you guys can see here, when we lost the 50 SMA on the 30-minute chart in particular, you can see how it was serving as trend support for that entire run up to start June. Once we sold below that 50 SMA, things got choppy, and the 50 SMA has now been serving as resistance. But I do want to talk about trading this and how I've been trading it. So something that's interesting and important to know about this sell-off is that it has been very controlled and it's been slow. And if you look at the chart, you can see that these sells really haven't gotten much continuation. And so there has been a lot of opportunities to buy the dip and play the bounces. Now, the important thing to understand is that if you are trading long in this type of environment, we can't expect for those giant rallies that we got to start June to continue. Okay, so as long as we're trading below the 50 SMA and we're getting this controlled selling, there still are opportunities to trade the bounces, but you have to lower expectations. You have to understand that as you're coming up to the 50 SMA on the 30-minute chart, it's likely that it's going to serve as resistance until we're told otherwise. And that would look like a break over both the 50 SMA and the 30-minute and the 1-hour chart. But again, it's a bit telling that the sell-off has been controlled and it's been slow. To me, it just seems to be more of a corrective move. The guys were just talking about it. Noah mentioned extremely overbought. Any overbought signal was flagging coming into last week. And this is just a natural corrective move that the S&P needed to make in order to now look to make a move higher. But that, again, does not necessarily mean that we're going to see the type of rallies that we got to start this month. That was absolutely abnormal. 20% of the time markets are going to trend, meaning that 80% of the time we're going to get something like we saw last week where there's a lot of chop, sell the bounces, the moves to the downside are trapping shorts. There's not a lot of continuation on either sides, and it's a more difficult trading environment. So picking your spots and being careful, but also looking at bigger picture, understanding, okay, where are my odds better stacked, going long, short, and things like that, just kind of understanding the momentum. I think that based off of the fact that if you look here at the 1 hour chart, and you look at the strength of this rally, I mean, we hadn't broken below the 1 hour 50 SMA since the end of May 25th, it looks like, okay? So think about all of these breakouts that we got, all of these rallies. Now, anticipating that the S&P is going to have to go through, a corrective process, whether that means pulling back some more, whether that means extreme chop and trading sideways, that's likely what we're going to see. So, we made our money at the beginning of the month, trading those giant breakouts, but that's by no means normal and important to keep that in mind. That's going to do it for the system. We're going to go over to Sipes now for Beat the Bell.
Do it for the system. I'm going to pass it over now to Ramsey Rippers for Bet the Bell. Good morning.
Good morning, guys.
Nice.
They're still rigged.
How did that happen?
That's because I bet green on Friday. I've had a string of some losses in a row here. It's not good. Need to get back on my horse.
All right, let's get to it. So, first question that we're gonna have to go with, as you guys know, green or red? We have to start with Diamond.
I'll go green to start the new week.
Okay. Mander.
Also taking green, rallying here in the pre-market. I think there's a lot of good setups across megas. I'm going to go green as well.
Ando.
I'm going to go green.
I'm going to have to make it green all around. The next question I got for you guys, pretty interesting question. Would you rather own Meta or would you rather own Amazon? You can only own one. Which one are you going to go with and why? Diamond.
I'll go with Meta. I'm going to go with Meta. I like Meta because when you look at it from like a customer base perspective, I mean, they have access to what, like 2.5-3 billion phones through their combination of Instagram, Facebook, WhatsApp. And for me, when you look at just a customer base that size, it gives you the opportunity to fail. And so a perfect example is you look at the entire situation with the metaverse, and Mark kind of put a lot of his eggs in one basket, really sort of going after the metaverse. And once ultimately they realized that was not going to be the transition for their company that they thought it was, they were able to scrap it and sort of move forward and pivot. And I think that you have to be able to fail if you're going to ultimately succeed. And so I think that margin for error that they have allows them to try different things and try and be on the forefront of the next wave of technology. It looks like that's going to be AI as of right now, but I think that optionality for them is what makes them so attractive. And so I'll go with Meta.
Good answer. Mander, what do you got?
At current prices, I'm going to take Amazon. And I say this because I think Amazon's been really beaten down recently based off of the pullback in retail spending. I think obviously their biggest business is their online storefront. But I think moving forward, they have a lot of good tailwinds. Energy prices are coming down, so their margins are going to go up based off of trucking and fuel prices going down for them. Retail spending clearly went nowhere with the strength of the economy. Pulled back, of course. But if we're really going to have this narrative where we avoid recession and pull back into a stronger retail spending avenue, retail spending upticked last month, I think Amazon's in a really good position here, also being at the forefront of the professional cloud services with AWS. I think they have a lot going for them to be trading where they currently are, not that high off of lows.
I like that too. Diamond, Hondo, what you got?
So I'm going to spin the question just a bit and treat it as which stock would I buy here. I am of a similar mindset to Mander. If you look at the meta chart, I mean, the thing has absolutely exploded along with the rest of tech to start the year. And Diamond makes a really good point about the user base, nearly 3 billion users, which is massively advantageous. And as he mentioned, gives them the opportunity to fail, which they did with the whole sort of meta thing. And that kind of freaked people out. But clearly they were able to rebound. But I think that Amazon is just an amazing company. I use it all the time. And that's really how I like to invest in companies that I believe in, that I find to be useful in people's everyday lives. And they still have, a massive customer base of nearly 500 million. So I would go with Amazon here.
Yeah, I think I'm going to have to take Amazon for very similar reasons, just because, honestly, they get more money. Even though that Quest 3 headset is very tempting, I'm going to have to take Amazon. So now I got an interesting question for you guys. Right now, currently in the pre-market to this very minute, well, maybe a minute or two ago, we're sitting at 433.05 on SPY. What do you think comes first on SPY, guys? 450 or 410? And why? Mander.
Starting it off here. I'm going to take 450. I think we take last week's high going into the end of June here this week. I'm expecting a really strong week, and that would then put us at what was previous highs? 443. So I think if we take out that high, now you're 7 points away from 450 versus 410 below. So just off my thesis for a green week this week, I'm going to take 450.
I like that. Diamond, what you got? 410 or 450?
I'm going to agree with Mander 450. Even if we do get a pullback, 410 seems a bit overdone, I guess. I mean, if you just looking at a daily chart, I mean, that's sort of like the breakout range, right? We consolidated a bit there in May, ultimately taking out, those highs in June and sort of pushing up from there. That would be a more than a retest of the breakout area. And so I think that would, get pretty close to actually looking at a technical breakdown of the rally. So I'll say 450.
Hondo, what you got?
I'm going 450 as well. I'll take the technical route. There are several breakouts I talked about earlier when we were looking at the system chart that we kind of put in to start the month of June and late in May. And getting to 410 would mean that we would have to lose several massive levels of support. And then also we've been talking about the information that Rocket Scooter is showing us and using the monthly map, showing the bullishness out to the end of the summer. And I think that we'll run up and tag 450, certainly before 410.
I like that. So I'm going to have to be the devil's advocate here, and I'm going to have to say something bad's got to happen, man. Like, we can't just make a new high. Like, we can't just – it's not going to be that easy. Come on, guys. Something bad's got to happen eventually.
Famous last words.
I'm going to have to take 410.
Something bad, like economically bad? Or...
No, like some war will start. Something bad will happen. You just know something's going to happen, man. Come on. I feel like Mander right now when I'm saying it. But if we go straight to 450, man, it's a fairy tale. Come on. That'll wrap it up for Bet the Bell. I'm passing it back to Hondo here.
All right, guys, that's going to do it for this morning's show. We'll be trading live all day in the King Capital Discord. You guys can go to kane-capital.com. We got a 7-day free trial going right now, so you can join us and check out what we got. But hopefully you guys are ready to go. Hopefully you had a good weekend and you're back focused, re-energized. Snipes clearly is not. He's yawning. And you're fired up to go and do some trading. We will see you guys back here Wednesday morning at 8:30 a.m. Eastern Time. Have a good one, everybody.